Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently March 27th, and in today's video we're going to be discussing a few different stocks, sectors, and industries. And basically, we're going to be starting off this video with Tesla, oil, Bitcoin, the S&P 500, and some potential trade setups that we may have on the near-term horizon. There's a couple longs, there's a couple shorts, so it gives both the bulls and the bears an opportunity to make money in this market. And that's what we try to do here, is just find opportunities to make money. Now, starting off with Tesla's daily chart here. Naturally, I'm expecting the QQQ, the Nasdaq, to head a little bit lower, and we actually did see that today. But despite the Nasdaq coming down and finish negative, Tesla actually finished up 0.74%. So out of the 6 out of the big 7 mega caps, Tesla held the most relative strength today. So that is a short-term positive if you're long Tesla and holding this. Now, in my opinion, considering I did see this relative strength, that makes me lean, if I were to pick a mega cap stock, it makes me lean a little bit more bullish on the side of Tesla. So what I'm seeing here is maybe a potential long opportunity. What I would love to see is a daily close above this key trend line here to give us an opportunity to play long. Now, I would prefer to actually wait and see Tesla dip and fill this gap around 183 to start accumulating. That would likely coincide with kind of a fake break of this wedge pattern to the downside. I would love to see that, because that means you can pick up Tesla at a long and then just have a very tight stop loss, basically using this low down here, so you know what you're risking. And that's what's important in this specific bear market, is you have to know what your risk is and then know what your reward is and see if it's worth it. And in my mind, I think Tesla is actually looking primed and ready to potentially make a move all the way up to this 230 mark. Notice how we've never got that official retrace to the major breakdown zone. I think Tesla still has to suffice that level. Yes, there will be tons of resistance up here around the previous high at 216, but I do think that Tesla's building a base to potentially move higher. And if the volume really starts to lighten up in the market, that's where we typically see volume inflows flow into Tesla, which help keep the stock buoyant. And like today, Tesla was the highest volume stock traded, and considering the S&P and Nasdaq had much lower volume, that one of the reasons I think Tesla was positive because of the volume flows and profile. Now, if we look at the US oil industry, so WTI crude, basically crude has had an epic rally. It closed up on the session up 5.26%. So that's, as a consumer, is going to hit all of our gas prices and levels. It won't reflect that in the next consumer confidence, which is later in the week, but it certainly will have an effect on consumer confidence with gas prices going higher. Consumers don't like to see gas at the higher pumps. That's the first thing they immediately think of when oil starts to go up. And that's the first thing we really see, because all of the other hidden direct costs, we don't get to really see them instantaneously like the gas prices. We see it pretty instantly. Now, where I think the oil market is going to retrace to, at the very minimum, $74.60, $75 maybe a Pierce. And then I think there's going to be a lot of resistance there, because this was your big breakdown zone. Now, if the price action of oil can reclaim this little bit of a wedge pattern, I do think it has a little bit more upside before the next major resistance point. Now, there are going to be some oil trades that I'm specifically looking at. We did see the energy sector perform very well today, but I am eyeing up some energy trades in the very near term, but I'm waiting for a little bit more clarity just to really execute and pull those triggers. Let's touch base on Bitcoin, because there was a lot of announcements regarding Bitcoin. And first off, I will actually just show you this article on Bloomberg here. But basically, Binance isn't FTX. It's much bigger and more systemically important to crypto. That is true. Binance roughly accounts for 60% of the trading volume. And the big headline, the CFTC sues the world's largest crypto for violations. CZ, Zhao's firm, is deeply enmeshed in all corners of the industry. So there were rumors that basically they have 300 trading accounts that are being used against their customers, potentially trying to almost, I don't want to say manipulate the market, but in a way that could be proven in this lawsuit or court if they are manipulating the market. And certainly when we look from past historic cycles in crypto, which there aren't that many, but from the history we do have to observe, you look at what has transpired in this latest high interest rate environment. Ponzi schemes, epic collapses, FTX, this brokerage, this exchange going under. You know, there's been so many cases of fraud that it leads you to think, okay, if this trading exchange acquired 60% of the volume and is doing way more volume than any of the leading next crypto exchanges. I mean, FTX was the second biggest behind Binance. You have to wonder what they have in their overall, behind the scenes, what could be going on. So that's just a very interesting article. We'll certainly see if basically if CZ has a response and Binance has a response. Obviously, it's a lawsuit. As of now, there's no criminal proceedings, but notice the trend. You have crypto news with regarding the crypto banks getting demolished. Then you have Coinbase with the Wells notice, the admission. And now you have Bitcoin. So it really seems like regulators are targeting crypto. And I think that's a good thing. Obviously, the short-term price action, if we look at the Bitcoin price here, Bitcoin dumped, the whole crypto Bitcoin jumped. But it has started to recover. I mean, you're well off of the lows that actually pierced the 27,000. And now you're looking to close back above 27,000 on the Bitcoin chart. Now, from what I'm seeing, Bitcoin is getting top heavy. There's lots of distribution, but perhaps Bitcoin is just waiting for quarter one to finish, which is at the end of the month, and quarter two to start to potentially see more downside. Obviously, the big pattern we have to pay attention to is this broadening formation. Considering you're getting very top heavy, it's likely means you're going to test the next support in the near term. Now, let's take a look at the S&P 500 here. Because it is giving us a lot of mixed signals, and as an investor, you've just been chopped up. We were touching base with our members on Friday and during the week that realistically, if you look at the beginning of March, which it was this candle over here, you had a high on the candle of around 397, a low on March 1st of around 393.30, and you're basically stuck in that range. Almost a month of price action has transpired, and the markets have gone nowhere. And you have to really analyze, okay, if the markets have gone nowhere, where has your portfolio gone? And for TC members, March has been one of the most profitable trading months in my career. And we have been banking crazy amounts of winner. We did 2 double-digit gains today. One on our Coinbase short, we covered that. One on our DKS short, we covered that. So we're continuing to just print profits in this market as investors get chopped up. And that's why it's super important to pay attention to the price action and be very active, because that's what we're in for. That's what I believe. We're in this multi-month of chop fest where markets aren't making meaningful trends. There's a lot of uncertainty. And when there's a lot of this volatility and up and down price action, there's a lot of opportunities. However, what this is signaling is that there's overall distribution occurring in the market, and we have to be mindful of that aspect. If big players are unloading, you need to be aware, because if you're buying what they're selling, often that doesn't end well. Now, in terms of some levels, there's a couple key levels that I'm watching with my members. Basically, I just want to draw one potential pattern for you. So there's this head and shoulders pattern that is maybe forming. So basically, what I'm looking at here is you have this left shoulder, and this, forgive my sloppy drawing tool, but I'm just doing this really quickly and rough. And then you maybe are in the process of forming this right shoulder. But based off of a little bit of congruency and pattern similarity, it would suggest that the right shoulder maybe should come up and retest this double top at some point and build a little bit of a higher right shoulder to be more in line with this one. Again, it doesn't have to be a perfect shoulder. Right now, this pattern would suffice. But if this pattern triggers to the downside, that is a big move down in the S&P 500. Obviously, one thing I will keep in mind is that this is a bearish pattern that is forming, but it hasn't triggered. So you can't really entertain the head and shoulders until it triggers this neckline. But there's certainly a lot of other multi-sector signals that will enable you to get the best entry into these patterns and maximize your profit gain. Now, in the short term, obviously there is some support, being the fact that I believe, let's just flip on the 200 daily moving average. So there's short-term positives in this market, and one of the reasons why there's the ability to potentially float a little bit higher, even if the tech market sees downside, is if we enter a little bit of a lighter volume period where there's no economic data really until the end of the week, and there's light volume in the market and you're trading above the 200, that is a short-term positive for the algorithms to trade against. As long as you're trading above that 200, this market still has some short-term positives beneath it, although the breadth in the market is extremely weak. Now, I'm going to let you in on a couple of long trade ideas. So basically, IGV is the tech sector cloud services, cloud software. So I am firmly believing that tech has a long way to go to the downside. However, there's pockets of tech that are going to distribute and basically decline, not in similar fashion. They're going to break key trends and correlations, and they're going to move against each other. That's why the market's been so crazy, is because you've had certain sectors performing, other sectors declining, and so on and so forth. And I think we're going to continue to see that. But one of the sectors that I think is worth paying attention to on the bullish side is IGV. And there's specific cloud stocks that I'm eyeing up for my members, but I'm looking at this inverse head and shoulder. You have this beautiful left shoulder, massive base, a huge head over here, and then a nice little right shoulder forming. And this is the neckline you need to pay attention to. If you get a break on this pattern is very reminiscent to the likes of, say, Nvidia, down at the lows here. Remember how Nvidia broke out of this inverse head and shoulders, where you had your left shoulder, your head, your right shoulder, and look at what pattern came from that epic rally, a massive rally from that break. So if the IGV also breaks from this very similar inverse head and shoulders pattern, that's going to be very bullish for this particular sector. And I'm going to encourage you to do a little bit of homework and look what stocks are comprised in this IGV, because those are likely going to be the major beneficiaries if we do get a confirmed break to the upside. Now, obviously, I've given you a little bit of a bullish thesis and bullish insights. Now, there's some stocks that I believe are primed and ready for the short side. What I'm watching here is Snowflake. SNOW. SNOW is trading below all of the key moving averages, and it keeps getting rejected here off of the short-term 20, and you're forming this beautiful bear flag. So again, this little pattern, this is a bearish wedge on the larger term time frame, and then your shorter term time frame is also a little bit of a micro bear flag. So we could see stocks like that break down. Some of its counterparties like MDB, MongoDB, also getting rejected at the 200 and slowly starting to slip and lose the 20 and the 50 as well. So definitely pay attention to some of these stocks, because there's a lot of short opportunities playing. There's a lot of bear flags that you could pick out in this market, but there's also pockets of strength for those long investors that you can also capitalize on. So lots and lots to pay attention to. Now, on that note, thank you all for tuning in. If you've liked this video, please hit the big like and subscribe button down below. And if you're interested in what specific stocks we are looking at, because when you pick specific stocks, you generally get more alpha. When you pick an ETF, you don't get much more profit. You get more of that hedge risk. But there's a lot of opportunities, and we're constantly analyzing all of the sectors, hundreds and hundreds of stocks each day, to try to find the best setups for our members and continue to provide value. And currently on the year, we're up over 29% year to date. So we continue to try to strive in the right direction and push for a very profitable 2023.